Hedge fund manager looks at you and says, "So, what would you like to know?" And your brain says, "Say something smart. Say something smart. Say something smart." But your mouth says, "So, how's performance?" And the room goes silent. Not because your English is bad, but because you just asked the one question that screams, "I don't belong here." If you want to sound expensive, start asking expensive questions. Hi everyone, I'm Bruce Han. Welcome back to English with Bruce. This is the Wednesday edition. So we train the English that works in real boardrooms, real money conversations, and real pressure. Today's mission is simple. If you can ask these 6 questions, you'll never sound like a beginner in a hedge fund conversation again. Even native speakers will respect you because these questions are not good English, they're good thinking. Quick deal. If you hear one sentence today and think, "I'm stealing that line," then hit like. Subscribe too, because every Wednesday, we upgrade your English the same way smart people grow their wealth. Small moves, repeated, compounded. 6 investor level questions for hedge fund meetings. Pattern 1. What is your edge in strategy? Every hedge fund says they're different. This question forces them to prove it. Example 1. What is your edge in long-short equity? Example 2. What is your edge in distressed debt investing? Pattern 2. How do you generate returns when market condition? Anyone can look smart in a good market. This question tests them in the real world. Example 1. How do you generate returns when markets are range-bound? Example 2. How do you generate returns when correlations break down? Pattern 3. What are the key drivers behind your performance this time period? This question makes you sound calm, analytical, and high level. No emotion, no panic, just process. Example 1. What are the key drivers behind your performance this quarter? For example 2, let's level up the pattern. What are the key drivers behind your performance this quarter? And which of those drivers do you expect to persist into next quarter? Pattern 4. What would cause you to reduce or exit position? This is where you separate professionals from gamblers. You're not asking what they love. You're asking what would make them admit they're wrong. Example 1. What would cause you to reduce or exit your tech exposure? Example 2. What would cause you to reduce or exit your yen carry trade? Pattern 5. How do you manage downside risk without the benefit you don't want to lose? This is a powerful question because it exposes the real skill. Not making money, keeping money. Example 1. How do you manage downside risk without sacrificing upside potential? Example 2. How do you manage downside risk without giving up upside potential during high volatility periods? Pattern 6. Now let's talk about one word that makes you sound instantly sophisticated. Hurdle rate. What is a hurdle rate? A hurdle rate is the minimum return a fund must earn before the manager can charge performance fees. Simple meaning, let's say the hurdle rate is 8%. If the fund does not clear 8%, the manager does not get paid the bonus. Now here's the question that makes you sound like a real investor. How is the hurdle rate set and how does it impact fee structure? Example 1. How is the hurdle rate set and how does it impact performance fees? Example 2. How is the hurdle rate set and how does it differ by share class? If you ask weak questions, you get marketing answers. If you ask sharp questions, you get the truth. That's how you sound confident. That's how you stop being the English learner and start sounding like the decision maker. Thanks for watching English with Bruce. See you this Sunday.